opinions on the shilling post the referendum? I mean, a relatively strong performance that suggests that people are quite upbeat about the future of the country. Is this euphoria going to hold?
Thank you for having me. Yes, we were expecting the shilling to appreciate after the constitution was passed in the referendum, and we have seen it going to levels of about 79.50, 79.40. I think for the coming weeks, we're expecting it to trade around the ranges of 79 and 80 shillings. But with the central bank coming in to buy dollars and increase its reserves, we might not see a very strong appreciation. If the central bank was not involved, we might have seen it going maybe a little bit lower, maybe towards 78.50. But with the buyouts that we are seeing from the central bank, them increasing their reserves, then we're likely to remain in the range of 79 and 80 shillings.
All right, let's just talk about the general performance of the market. It's been doing really well, the NSE 20, over the last few sessions. And again, reiterating that very positive sentiment that a new constitution bodes well for the economy and the growth prospects of Kenya. But how has that filtered through in terms of the preference either for equities or bonds? Because we've seen a lot of activity on the fixed income market.
Yes, on the equities market, we expected to see increased interest from both local and foreign institutions, and also the retail investors, which we have seen, especially from the, I would say a week before the referendum, we saw a lot of fund managers coming in to pick up counters while they were still low, in anticipation that the prices would rise after the referendum and after the constitution was passed. This is because of the business opportunities that we're seeing, the improvement in governance, which reduces our risk profile as a country. And also, like you have said, we're expecting better performance going forward. I would say that the main interest would be on the equities market for the coming weeks. The fixed income market is still a little bit jittery because of the perception of interest rates. There's a perception that interest rates might turn up, although with the CBK intervention we might not see that. But I would think that the biggest interest would be on the equities market, and especially on the financial sector, and also on some of the industrials and commercial stocks. We might see a lot of activity picking up on this, which we have been seeing and we're expecting to see in the coming weeks.
All right, let's talk about results that have come out in Kenya. Bamburi Cement posted a drop in pre-tax profits of about 1 billion shillings. What's led to some of these losses at Bamburi?
This drop in revenues was mostly an impact of competition, which was expected, especially with the entrance of Mombasa Cement. We were expecting Bamburi to lose some of its market share. What Mombasa Cement came and did is they came and reduced the prices compared to the market prices of cement that we had in the market before they came in. So they came in and took up a lot of customers, and the biggest impact would be on Bamburi, which has had the biggest market share. It's enjoyed over 50% in the last few years, although we saw this coming down to about 50% last year from 58% in 2008. And this is one of the reasons why we have seen their revenues coming down, because one, their volumes went down, and two, also the prices. They had to revise their prices downwards, which had an impact on the revenues and at the bottom line. We also saw the profits going down. Although they have expressed optimism going forward that they expect the second half to be better because of the commissioning of the Hima plant, which they're expanding their capacity. But I would think, considering they get most of their revenues from the Kenyan market, that this is something that they will have to deal with. They will have to come up with strategies to fight off this competition.
All right, just in terms of Bamburi as well, some of the strategies that they've employed to protect themselves, because although there have been losses, they're not really very spectacular losses given market conditions and how the cement industry's fared within the first half of this year in general. They reduced their fixed income costs, for instance, but they also had debts to pay to Lafarge Cement, for instance, in foreign currency, and they had a once-off receipt to insurers of about 218 million shillings. Just what strategies have they employed to just mitigate against some of the risks that they have incurred within the market facing competition as well?
Yes, as you have said, the strategies that they rather employed in that period of time was reducing their costs that they incur, finance costs and distribution costs, which they have said have come down. But in as much as they are going to reduce the cost, there's only so much that you can gain from cost maintenance. But I think what they need to focus on is to grow their top line, come up with ways of either, they have said in the past that even if they reduce their prices, considering the market share that they command, that they would still be able to fight off competition. But I think that they have a very big problem. We've seen East Africa Portland Cement increasing its capacity, Athi River Mining increasing its capacity. Mombasa Cement is also increasing its production capacity. We are seeing Semtech coming into the market, and I would think that in the long term they have to do much more than just maintaining their costs. They would have to come up with ways of either creating new products or getting into new markets such that they protect their top line.
Okay, let's talk about the good news, and it's good news for the National Bank of Kenya, a 20% increase in earnings before tax. Why is that? What do they attribute it to?
If you look at the results of National Bank, what they have done is that they have increased their loan book, which has grown by about 46%. This coming from customer deposits, which have grown by about 34%. And this led to an increase in net interest income of about 34%. And for NBK, this is something that we had seen previously. If you looked at their books, their loan book was not growing as much as the rest of the banks were growing, and they have taken this opportunity with the improved GDP performance. They are going out there and loaning a bit more. I think they still have capacity to loan much more and to grow their loans book even better and record even better performance going forward.
All right, and just finally, just in terms of their growth strategy, they're looking to expand on their branch network, and we're also told of the state may possibly be selling its 51% stake in NBK. What's your outlook for the bank?
For NBK, the thing that would hold them is, or rather the thing that would determine their future is which strategic investor comes in and whether they're able to unlock the potential that is hidden within the bank. The government has been trying to sell off its stake, and they're trying to sell off plus the stake that the National Social Security Fund holds, but NSSF has been very adamant. It does not want to sell its stake. So there's been a push and pull between the government of Kenya and NSSF. But I would think that the strategic investor that comes into NBK is the one that, especially if it is a bank or an investor that is out to grow the loans book and take advantage of the opportunities that are present in the Kenyan market, is one that would bring out the good results that we can see from this bank. Because the banking sector has been recording good results, and we're expecting to see this going forward, especially with them growing loans. There was a survey by the Central Bank of Kenya which showed that all the banks are planning on increasing their loan books in the next few months to the end of the year. So I would think that if they would get a good strategic investor and explore the opportunities that are in the banking sector and tap into the unbanked population, that they can grow their books even further.